Good afternoon, everybody. Hope you're doing well. It is July 30th. It is Wednesday, FOMC day. Let's get into the daily market recap. So a good amount to go over. We streamed for a couple hours, so I'm gonna try to keep this relatively brief. We've got a big day ahead tomorrow, so a lot going on here. In review for today, let's talk about the playbook trades. I'll just rifle through them. And by the way, for those that don't know, if you open up this in the doc, you can reference any of these plays. I take screenshots of everything if you want to improve your pattern recognition or get familiar with the different types of setups that I trade in the playbook. I do this every day. So UNH was an active one today. This wasn't easy by any means, but it did offer a couple different trades. So we had this kind of front side, wasn't a front side rejection, but if you include the pre-market, it technically same idea. So you had a kind of opening drive move lower. This is the trade that I caught and then ended up getting trailed out. But then they had a failed breakdown at this 260 level that kind of played out twice. That turned out to be a little bit better. So a little bit of a shake and bake today, you could say. On the big picture on this is on the on the watch going forward here. I've tried a couple different swings in here. So I tried a swing trade here on UNH, and that obviously didn't work out well. We actually broke even on that one, I believe, um, and kind of avoided all this mess. There's a couple trades to the downside here that were pretty good, but now the thesis is relatively the same, but we're much lower, right? So from trying this, we're 20% lower again. So yeah, the chart's fairly broken, right? And at a certain point, you'll start to see this, catch up. But I don't know that it'll be, you know, quick, if for lack of better ways of putting it. So I put on a swing on this, and this is just an attempt to see if we can put in a higher low here and start to push our way higher. And that could take time, so that's why I bought, into January for this as more of an idea because the fundamentals are still pretty good. I think the outlook overall, while the looming kind of DOJ investigation is weighing on the stock. I think so much is being priced in on this, and you don't have to guess at the bottom, but there's certain spots that's, in my opinion, it's worth taking a stab. So, and just given the way that this, finally started to sell yesterday, and then today we got follow through that just couldn't continue, and then we just grinded higher. We'll see what happens, but it just wasn't acting right to the downside, and I think that this could start to play the upside. Anyway, so we'll see. That's UNH. Not the easiest, but there was some trades in there. UPS, on the other hand, very easy. This is one I in hindsight wish I picked this over UNH. I thought UNH was a little bit more nuanced, big picture, and that it could actually capitulate and be really really good. I even upgraded my sizing on that for those reasons, but it just didn't pan out, and that's trading. This, on the other hand, was a great example of just a trade doing exactly what you would expect it to do. This is a day two continuation trade, so we have a very weak downtrend. Big picture on the stock. We have a gap down on earnings, big sell. Closed on the lows on day one, which, by the way, this was a very good opening drive yesterday. And then today, it's continuation under the prior day low that happened to match and line up with this very clear pivot at 90.55. It's also worth noting the stock didn't really go anywhere from the April lows, so it's very weak. So when you kind of look at the intraday action, you have this aggressive opening drive entry that paid super well yesterday, a bit of a pause, and then just a clean break that just never looked back, just trended and closed on the lows again. So this is one that stings a little bit to miss for me just because it's so textbook. It's like a picture perfect trade, and everything that I look for. But that is trading. You're not going to catch every single one, and if your reason for missing one is because you're focused on another, arguably as good or top focus opportunity, then it is what it is. At the end of the day, it's odds, and sometimes you don't pick the right one. So you have to just accept that and move on. But for review and for archiving, this is fantastic. FCX and BE. So I already reviewed FCX on the stream. If you want to go back to recording on that, This was just very simple. So the 200-day, Space Monkey called out the 200-day to me, which helped me a ton in this trade, which is just a small side note on how information is edge, right? Like I didn't know or wasn't even thinking to look at the 200-day, but he called out that it was moving fast. I grabbed the headline, and the reason for me scalping this, I did trade this today. I didn't alert it because it shares and it's fast and a little bit harder to do that. Um, but for like just a scalp playbook and a rep, this was really good news. So anytime I see news intraday that I interpret as being good, doesn't always work, but this one to me was pretty clear. So there was an increase in tariffs on copper by 15% effective, 50%, sorry, effective August 1st. Copper futures dropped 20% in like a couple minutes. That's significant, right? So when you're considering if a headline will have follow through or not, the weight of the catalyst is super important, and it's not always easy to determine that. But this one was, 50%, um, increase in the tariff, and then seeing confirmation from the stocks reacting in such a big way that just tells you how important it is. So getting into the trade, I explained my thought process to this, but Space Monkey called out the 200-day, which was at 40.53 at the time, right around this level I have drawn here. So it gave me some framework to go off of, and this is super simple. I like to look at the two bars on breaking news or momentum trades like this, and it's super easy to do that to kind of eliminate some confusion. The best ones, they'll just keep going and not really trail out. And that's what happened here. So I did get piked out right here. But since that aligned with the 200-day, I was quick to get right back in and give it a second shot. And I'm glad I did. I managed to get another ad here and then just took this to the lows. I got trailed, I think, my last bit right here before this end of day puke out and recover. So really good scalp. Good if you're going to be scalping. I talk to traders often that are like, "Oh, I'm a scalper. I'm a scalper," and then they'll be trading like SPX every single day, or they'll be trying to trade Meta every day. It's just that's very unlikely going to work for you in the long run. There's just not enough edge. But when you align your a scalping business with something that's moving on news or even just something that's very in play, like UPS. Say you just miss UPS, you can kind of just wait, right, and pick a spot. Once you get back a nice back test into the range, something like this, and then you can start to kind of scalp shorts out and ride it lower. Like focusing on names that are more likely to move a lot makes it way easier, right? This moved 4% today after being down, however much it was yesterday, 8%. So anyway, I digress. BE was another one. Last one here, and we'll move on from our review. This was super simple. I was kind of ticked off that I missed this, but I was focused on another trade. So again, I have anticipated the end of the week being really good, but the front half of this week has provided so many good opportunities. Haven't caught them all, but it's great to see that there's good opportunities in this market. So BE just been a name that's been in play. The sector has been very in play. And the thing that we talked about yesterday, if you remember on the call, was that we have this high and tight consolidation. That's important because the short float is elevated. And anytime that's the case and there's a higher degree of squeeze potential, the fact that the stock was avoiding any major dips and it's sustaining these highs after this big run is very bullish. So you have to kind of wait for the next break. And then once that happens, you can get aggressive with longs with tighter stops and just ride the squeeze higher. That's exactly what played out. We talked about this yesterday, played out exactly like that today. So this was fantastic. Very good opportunity if you're looking for a good example of like a momentum or breakout trade. So you just enter on the break, use a prior bar. So think about this if you're even super aggressive here with your stop. Say initially you enter on this break and you're risking this prior candle. Like you might, like a lot of times I'll go down to here, just to give it a little bit of room to work. But if you're super aggressive and like, I'm taking the break, and as long as it doesn't trail out from the origin of the break, I'm long. Think about the risk reward here, right? This is literally 10 cents. So yeah, you might need to add a little bit of room, a little bit of a buffer for some slippage. But this is an example that worked well. You're risking 10 cents. And if you use, 5-bar trails even, on a closing basis, that would be here. That's $1. So risking 10 cents to $1. And then if you reposition or have roll ups or runners, the trend doesn't ever really break until the end of the day, over 2.5 points higher. So, you're risking 10 cents to make $2.50 is crazy, right? So if you're getting max size based off that risk reward, you can just do the math. I mean, that's just really, really good. All right, so let's get into the market review. What the heck happened today with FOMC? Largely nothing burger initially, as we all expected, right? There's a 97% chance they don't do anything with rates. Basically, 100% chance everyone knew they weren't going to do anything, and they didn't. But then we got into the Q&A and the presser with Powell, and things started to get a little bit more dicey, which is often the case. So what I have found to be kind of interesting is if you go to the weekly and look at this trend line from January 2022, I drew over the weekend. I just called this out as just as an observation. I'm not calling top or whatever, but it's interesting. It's a spot of interest, right? We've kind of tested that last week, broke above it a little bit. And then what's interesting to me is if you look intraday, that trend line, look at the way that we've tested. So there's, just draw this here. So you have test here, test here, test here, back test here, clean test here, clean test here, clean test here, and then a trap. Like that's pretty interesting, right? Like the fact that you're getting that much confluence on a lower time frame is kind of interesting. So we respected that. Once the presser started, we did get this kind of spike and failed move higher of sorts. I wouldn't necessarily say failed breakout because it's not really breaking out of anything. Maybe you could consider that trend line, but nonetheless, a bit of a fake out to the upside, which is often what happens on FOMC. All right, and then the gamma landscape was largely negative and gave us a very clear range today. We had 63.35 below, 64.20 above, and a pocket of negative gamma in here, and it just was incredible how helpful that is, because the price action just played out almost exactly how you would expect because of that. We came down into the 63.60 support area. There was a path of least resistance around 75. That got taken out, and we went straight down to that 35 peak and bounced right back higher, right? So it's just like very helpful to have that level of information thanks to options depth and the data that they're giving us. So if you guys have any questions about any of that, let us know. But I know that the gamma stuff can sound confusing at times, but I try to just simplify it by looking at the peaks and the pullers, and then just understanding the general gauge or temperature. I view the type of gamma as almost like a temperature check in a way. So lighter gamma is going to be more freedom to move. Negative gamma is going to be more volatile. Positive gamma is going to be a little bit more grindy. That's pretty simple when you break it down like that. So anyway, after earnings, we pull up the S&P 500, which pulls in the aftermarket move. We got a huge move right back up to where we kind of trapped that high before selling today. So, and that's because of Microsoft and Meta earnings. So today, big picture, we talked about this earlier on the stream, but just to reiterate, when you look at the overall trend and key levels, we just back tested this 63.31 area. So this was a prior high, give or take a couple points. So that I could probably update this here to 63.35 or so. This was actually an extension before we ever got to these all-time highs, and you can see how well that reacted. So we just check back to that, and there's also the 9 EMA is here as well. So a bit of a check back. We held, and basically what I was talking about earlier, to reiterate, is just that if we hold the upper part of this trend or this range, and then we beat on earnings, Microsoft and Meta beat, where it's just business as usual. It's a check back, and then boom, we can create a chase to the upside. Versus if we start to lose this 35 area, then you start to get into a little bit different kind of territory where you likely welcome or open up a fade and a bigger sell into 62.90, which is bigger support. And then below that is when things really start to accelerate and we could get a nice correction in the market. But so what did we get? Well, we got Microsoft and Meta beat, very strong beats from both of them, very huge moves. And the market's right back up to 6,400. So where does that leave us going into tomorrow? For me, it's pretty simple. I think as long as this holds and we don't get any crazy move on the data, the economic data that's coming out, which I wouldn't really anticipate that we do, but you never know. Um, that would be something that I think, we have some legs to carry us to the next extension. So the next extension that I have is 6450. So that would be target above. If we can manage to break out over these highs tomorrow, then I would be anticipating a push into the highs from future 6420 area, and then 6450 above that. So if we were to reverse, so there's a kind of a very simple approach here. Above 6400 favors those targets, and in between the 6330 and that spot, that 6400 spot, it's just chop. I would be very cautious within that. I don't think that the market is in play. I'd focus on individual names and not really mess with the market in between those levels. If we start to lose 35, then we can begin to think about more selling pressure again, and then you just kind of take what you can get and see if we can get a move into 6290. All right, so that is our full plan, full review for the overall market. Let's get right into a couple active positions. I actually need a second here. I need to grab, and Space Monkey actually does have open position. I need to add this. He had to check out just a bit early. He has UNH. Where the heck is it? Sorry, guys. All right, I got it. UNH, he is holding some UNH. So quickly on active positions, Netflix, not the greatest look here into the close. I'm being probably a little more patient than I maybe should. My thesis hasn't really changed. We're still below these hourly EMAs, but it's getting close. So, I'm running out of time here, but I'm still pretty confident as long as we're below it. For a wash, I'm holding 1150 puts. Those are getting beat up a little bit now, or not a little bit. They're down about 60%, so it's a decent amount. But then we're pushing lower here in the after hours, which is kind of interesting. It to me, it's just kind of gut check, if you will. It just feels a little bit of a shake and bake before a bigger move. So, maybe some data will give it a little bit of a nudge. We'll see. I'll be looking to cut it if we push over today's highs early tomorrow. But for now, it's looking okay. Just need to see some kind of acceleration fairly soon, because time is our problem, not necessarily the technicals. Let's see. ASML is just a roll. LRCX was up when I last checked, and ARM was down. So let's see. LRCX still up a little bit, but pretty decent pullback, and then ARM selling. ASML not really reacting. So, that swing looks kind of dead. Holding some swings. Charter. Really nice add on this one today. So yesterday I expressed a little bit of frustration, missing some of the moves. So I took some profits into this 287 level, or it was a little earlier actually. It was like 289 over in here. Took profits on the puts that we had rolled from the prior day, and then missed this leg of the move, which was a bit frustrating. But I am glad that I was just patient and sat on hands, because we got the secondary opportunity where I literally added the shorts back right at the top of this. So all in all, didn't really miss much of the move. So we're back in a core position as a rule. Let's see how that goes. Looking good right now. It's just one time framing lower. Tesla. So Tesla's interesting. It's kind of I find it funny that I'm positioning for swing just because of the way I've talked about it over the last couple of weeks. But I think we're getting closer and closer to this wedge breaking, or at least getting a test in the upper part of it. So I've initiated a swing a couple days ago with the intention of holding for the idea, not getting caught in any kind of shake and bake. I don't want to look at it too close. Today's a great example of why that is the case. As you can see, this candle looked really nasty, and then now it's actually looking really bullish, right? So that is fully what I expected from Tesla. Not to be easy in terms of timing, but as long as the thesis stays alive, I'm willing to hold some risk. And I actually added almost near the lows, at the lows today, added to the position. So that'll be the last add. I won't be getting more aggressive than that, but pretty simple here. As long as we're above 300, I'm bullish, and I bought enough time that I should be able to see this play out. All right, so that's Tesla. Baba's doing, I mean, it's just as is tradition. I don't know what it is. I feel personally that I am just not able to catch a good swing on these names, but I bought a lot of time. So I bought all the way out to January this time to try and catch a bit of a rotation into this trade. We're pulling back to these EMAs here, so this is a very important spot I'd like to see hold. I'm not against, I know it's early. I just added this a couple days ago. I'm not against cutting it if we start to drop below, because then we can just add it back. I don't like babysitting trades. Not the greatest at swing trading certain things like this, but this wedge break is really what was compelling to me as we started to see a bigger push and BABA and China stock. So we're back testing this prior high, a little bit of a wedge back test on the trend line. So we'll see what happens. I have a lot of time, so willing to be patient here, but not too patient. We can always add back higher, which is fine. So all right, getting a little long here in our call, so let me try to speed it up for everybody. Watch list going into tomorrow. So obviously we have day one, Meta, Microsoft, Hood. Okay, so not too much to say here. We'll see where it's at in the morning. All right. There's obviously very big moves. They both moved more than what was implied. This is big, right? So Microsoft in particular, I was talking about how it needs like an exhaustion gap before it really gets good again. Might have that here. I mean, this is absolutely an insane grind higher and then a huge pop on earnings. So doesn't mean that I'm saying that tomorrow just goes lower. This is a very impressive move and good beat. But you could see a bit of a exhaustion gap or something. We'll see if it sets up. Not going to force anything to the downside there. And then Meta has these prior all-time highs to watch. So, we'll see where it's at in the morning as well, but it's gapping through these highs, 747 right here. So we'll see. Maybe you get a bit of a back test or something that turns higher, creating an entry. It's too early to tell, but they are both pretty darn bullish. Hood, I don't think is reported yet, unless I'm missing something. So just gonna skip that one. All right, some continuation play. So LMT, this has just been a really tough one to time, but the thesis has stayed the same. So it's starting to crack a little bit here. So I would consider a swing on this tomorrow. I already have a decent amount of active positions open, so I'm not in a rush. Charter probably the best big picture looking name that I'm invested in right now. So I'm just keeping an eye on that. 410, you could also just wait for that. PANW. So this is day 2 tomorrow over the Friday high. So watch that for a start to run up back to 190. Starbucks, STX, MO, Starbucks. All right, so we have another continuation setup. So big fade, failed breakout on earnings. This closed actually kind of decent. It's a decent bounce. So not on my first watch or anything tomorrow, but under these lows would be continuation. STX, this one's a little bit better. So minimally, you could scalp this to this little gap fill spot at 148.54. So keep an eye on that. This is a very nice close. So gap down. This is what I call a day 2 fade. So day 1 was down. Day 2, so day 1 was down, but closed on the highs. So gap down, close on the highs. Tomorrow you're looking to catch that continuation trade. The minimally filled the gap, but could get even better than that. This is a really nice dip. So a name that's been super strong, gaps down, bit of a reset, and instantly gets bought up. That's a lot of strength. MO, so Altria Group in the healthcare space, the tobacco space in particular. So this is, if we go out to the weekly, a very strong looking chart starting to kind of break these weekly consolidation highs. Going into tomorrow is just a textbook day 2. So better for shares, but something to watch, 62.21. All right, we talked about Tesla. We talked about Charter. We talked about Netflix. BE, just keep it on watch. Today was, in my opinion, like the day to trade it, but it could still get some legs over 38. It's a key level to these highs at 40. So it's actively squeezing, right? And there's really not a whole lot in its way from here until the highs. So 40 initial resistance. A little bit of resistance at 42, which we can go ahead and just add, and then 45 at the highs. All right. And I believe UPS, just keep on watch. You know, this is kind of similar to Charter, but not as good, but still was a really good day one, day two. You know, don't want to force anything here, but worth keeping on the radar. All right, we're at 25 minutes, so I'm going to wrap it up here. That's what we're looking at going into tomorrow. If you guys have any questions or find the video helpful, let me know. All right, have a great evening, and I'll see you in the room tomorrow. Bye.